The popular commodity that everybody hates is silver because it's disappointed people so much, so often. Make no mistake, I'm a precious metals bull. I'm looking not for higher prices, but for sharply higher prices. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised by the silver market and more surprised by the strength in silver equities as consumers become more concerned about fiat currencies and they become more concerned about the structure of the financial world, that gold and silver will increase in attractiveness relative to other asset classes.
Silver prices have tumbled from a late-week peak for Friday's trading, skidding into $22.30 after falling over 5.5% throughout the U.S. trading session. Silver prices have consistently waffled on the top end ever since slipping from 2023's early peak above $26, a high setback in May. According to Rick Rule, while silver has historically disappointed investors, he believes the current narrative surrounding precious metals will shift positively. He anticipates that this change in sentiment will surprise speculators, particularly in the silver market, and expects strength in silver equities. Rick Rule contends that owning physical precious metals, such as silver and gold, can safeguard in case of issues with digital currencies. Gold and silver have long been considered safe haven investments, particularly during economic instability. These metals possess intrinsic, enduring value and provide a sense of security. Regarding concerns about government confiscation of assets, Rule suggests that the risk of the government taking private assets like IRAs or gold directly is probably exaggerated. Gold confiscation is a rare but real phenomenon that has occurred in the past, as exemplified by the historical event of April 5, 1933, when President Roosevelt ordered all citizens to surrender their gold to the government. However, governments today tend to employ subtler methods to influence wealth, such as currency devaluation, increased taxes, and additional regulations. Rule believes these indirect approaches are more probable than direct asset confiscation, as the latter could provoke strong opposition. For instance, China has approved a law allowing authorities to seize and freeze assets of foreign countries, illustrating a trend towards indirect methods of wealth control. We will now bring you clips from Rick Rule's interview with Liberty and Finance. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Traditionally, particularly with things like junk silver, the physical precious metals take the form of cash. If you have a circumstance where, as an example, the government institutes a central bank digital currency, and if, as a consequence of the way you speak and feel, the way you present yourself on social media, they cancel your central bank digital currency, which they can, you would be very happy to have gold and silver, which you could exchange for other forms of value. My suspicion is that as consumers become more concerned about fiat currencies and they become more concerned about the structure of the financial world, that gold and silver will increase in attractiveness relative to other asset classes. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised by the silver market and more surprised by the strength in silver equities, which have been an investor's graveyard since 2020. I think the other thing that's going to surprise us will be very high quality rare earth deposits in places outside of China. The rare earths business is virtually unknown, but these things are extremely critical. Demand for them is growing very rapidly, and whether there should be or not, there's a sense outside the Chinese supply chain that alternate supply chains need to evolve. So I think that high quality rare earth deposits, when and as they occur, will surprise people to the upside. I believe that you will see, this is an old theme, Donegan, one we've talked about for a long time, but I think you'll see oil and gas prices higher for longer. I'm not sure that this is a speculative place to be, but for investors, being in conventional energy, given the cash flows that conventional energy producers are enjoying right now, irrespective of the wishes of the big thinkers, my suspicion is that peak oil demand occurs about 2060, 2065, and tapers off over 40 years from then, which is to say that these high current yields, I think, will continue. That isn't to say there won't be some perturbations, there won't be some volatility. But for investors, not speculators, I think Warren Buffett has aptly demonstrated that the oil and gas business is a wonderful place for a real investor. I think in both Canada and the U.S. that the fear of an overt grab for private assets is probably overblown. I think even the Trudeau administration experienced fairly severe backlash for their idiotic overreach around the truckers' convoy. People often ask me, when I was at Sprott, whether I felt that nationalization of precious metals or nationalization of IRAs was a real threat. I've come to understand, I think, that there are easier and cheaper ways for the government to steal your wealth. One would be through the debasement of currency. The other would be through raising taxes and fees. An overt grab for your wealth through your IRA or through your gold might be met by some Americans with an armed response. If the government were to come for your IRA or to come for your gold through the front door, which is to say to nationalize it, there would be an extraordinary political response and an extraordinary threat. If they come through your wealth, if they come for your wealth by quantitative easing, by inflation, by increased tax, by increased regulation, it's extremely popular with the
bread and wash. Oh, you mean what
they've
already been doing for the past century? Yeah.
Yeah. There's no risk to them. So I think that the risk of backdoor confiscation is much greater than the risk of front door confiscation, although I wouldn't put anything past the big thinkers.
When it comes to investments like PSLV, Sprott Physical Silver Trust, and FIS, Sprott Physical Gold Trust, Rick Rule highlights a unique feature. They're entirely free from any counterbalancing debt. These trusts operate with a straightforward and uncomplicated structure, completely devoid of the leverage and associated risks commonly found in traditional banking and financial systems. While they lack the federal deposit guarantee, they offer a unique form of liquidity. Rule emphasizes that individuals should consider gold and silver as forms of liquidity, especially when confronted with negative real yields on U.S. dollar-denominated cash holdings. Despite their inherent volatility, gold and silver can function as valuable sources of liquidity. Gold, in particular, stands out as a highly liquid asset that is not tied to any entity's liability, carries no credit risk, and has a history of preserving its value over time. Additionally, he regards the Sprott Physical Gold and Silver Trusts as convenient and cost-effective alternatives for maintaining liquidity without physical possession, thus avoiding associated transactional premiums. Let's get back to the interview.
To the extent that reputable precious metals dealers like Miles Franklin experience difficulties with their existing lender, once Battle Bank is up and chartered, I really look forward to competing for that business. Certainly, if we believe that gold and silver held in segregated accounts is great collateral, then we believe that providing selective flooring financing for precious metals dealers is a similarly good business. And we will be on that business like white on rice, Dunnigan. First instance, there's no federal deposit guarantee, which is to say that the government won't make good your losses if they occur in PSLV and PHYS. They are instruments that have no countervailing debt against them, which is to say, when you look at it as an entity, these trusts have no debt, and therefore don't have the threat of leverage and don't have the threat of a bank run. They are very simple businesses. To the extent that we had a broad-ranging financial catastrophe, where, as an example, the New York Stock Exchange shut down, something which, by the way, I see very small probability of occurring, then certainly while your ownership in the trust would remain intact, your access to liquidity through the sale of the trust units would go away. I would urge your listeners to think about gold and silver as a form of liquidity. And I would urge your listeners, despite the negative real yields around holding U.S. dollar-denominated cash, to hold some, whether or not they hold it in the banking system. I'm a big fan of liquidity. I regard gold and silver as good, if volatile, liquidity. And I regard the Sprott physical gold and silver trusts as convenient, low-cost alternatives, as ways of maintaining gold and silver liquidity that don't involve physical possession and don't involve the transactional premiums that often are present in other forms of gold and silver ownership. I don't regard as one as necessarily a substitute for the other. I personally own both physical gold and silver, and I own the Sprott physical trusts.
Gold and silver prices are sharply lower at midday Monday, with December gold futures hitting a 10-month low and December silver futures a 6.5-month low. While the gold and silver bears are presently in command, both markets are technically well oversold and due for decent upside price corrections very soon. Considering the recent drop in silver and gold prices, do you think it's a good time to invest in silver or gold? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.